afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson with a breakdown of the action in today's session, Tuesday, May 28th, where we saw the Nasdaq hit a key psychological level, you could say. But Ed, the market rally has narrowed.
It has narrowed. It seems to be Nvidia. A couple of other stocks that did do well today were Holdings and Wingstop, but Celsius, not so much.
All right. Well, we will take a look at those stocks, but first let's analyze those major indexes today. Here's a look at the Nasdaq Composite, the tech-heavy index closing above 17,000 for the first time. We also had the S&P 500 up fractionally today, and I'll pull that up right now. So here you can see the S&P fractional close here, and the Dow today down almost 0.6%, undercutting a key level in today's session, that 50-day line. The Russell 2000 also lagging today, down about 0.1%. Hasn't really gotten in gear yet, Ed, but the most impressive, the Nasdaq here. So your assessment.
Yeah, the Nasdaq looks great, and the S&P looks fine. I mean, let's look. You're pausing at all-time highs. Really, it's hard to get too upset. The Russell and the Dow don't look so great, and I think the only real concern is that even the Nasdaq is to a great extent being buoyed by Nvidia. I mean, like almost seems like just one stock. If we pulled up QQEW, which is the equal weight, still the Nasdaq 100, it fell 0.8, and so. Again, this is just finding support at the 21-day line. This would be fine, but it just shows you the difference there. And RSP was flirting with closing below the 50-day line, which is the equal weight for the S&P. So it's just showing a little weakness underneath. There's still a number of stocks that are doing well. There's more coming out, but it's just not as broad as we were seeing a couple of weeks ago.
Mm-hmm. And next on our list, we want to take a look at some ETFs. So speaking of Nvidia, here's a look at the SNH chip sector ETF, up 2.3% today, extending gains after breaking out to new highs last week.
Yeah, I mean, Nvidia is the biggest holding by far, and you can see its impact here. It's SMH is looking very good.
IGV, this represents the software sector, kind of on the ropes here, Ed, at a flat to declining 50-day.
Yeah, they didn't get a boost from Nvidia earnings and then kept falling on Workday, and it just isn't turning around. We'll get Salesforce earnings tomorrow night, so that isn't doing great either, but at least that'll be another, see another test for this sector.
Mm-hmm. And we also want to take a look at industrials, XLI, undercutting the 50-day line in today's session with a decline of 1.2%, Ed.
Yeah, this was one of the very strong performer. I mean, they was doing quite well. So again, a lot of sectors just, losing support at the 50-day line. It's not just the Dow.
Right. And let's take a look at XME. This is the metals and mining ETF, having a good day today, or had a good day today, rather, up 1.5%. Tested a breakout last week, pulled back in, now bouncing back up. What's driving the action here?
Copper prices are up 2%. Gold was up. Silver was up like 4 or 5%. So, I mean, that's what happened. Some of these prices came down. And again, that's sort of like even some of the sectors that we saw weakness. I mean, if they bounce back, it'll be fine. But yeah, this was the prices went up. That's what it comes down to.
That'll do it. Okay, here's a look at XLE. Of course, we know heavily influenced by the underlying commodity here, oil, but up 1.1% today after, undercutting the lows of the base last week. We can take a look at the weekly chart there. Last week's decline was not too great, down about 3.8%. So trying to bounce back a little bit to kick off the week this week.
Yeah, obviously a lot weaker than XME. There's a few names that are looking interesting, but yeah, more repair work in general for this group.
Mm-hmm. Okay, well, speaking of chip stocks, let's take a look at ARM Holdings. This is ARM, up almost 9% on the day, some heavy volume. It's been trading sideways in a tight fashion with resistance at the 50-day. So it really blasted through that level today, Ed.
Yeah, it's fairly clear cut, and you can even draw a trend line that I got through from the top of that base. If you wanted to be buying this name, you'd sort of, this would be the time to do it, because you probably wouldn't want to be buying it up at 164, the top of the base, or even 145 is a place maybe you could add to it, but even then that would be getting pretty high. This seemed like a time that if you're going to do it, that you could be doing it, because it's getting above the 50-day line. All these things, clear signals. Not all the AI chip names are moving out. It's sort of interesting. A couple of them are, few are following Nvidia to some extent, but a lot of them aren't. The low power that ARM is famous for really could come in handy for those superheated data centers, because AI chips run so hot.
Hmm. Yeah, and this stock has been hot and cold
Yes, it
because
has.
it really had a big move. Two earnings reports ago in February just rocketed higher and really out of the IPO base as well. But I mean, going from 164 down to 85 in just a couple of months, that didn't look too good, but it really has tried to bounce back. It's on the road to recovery, you could say, but that 1 week, I mean, that's just the tough thing for me, I think, Ed, is just the damage that it suffered in on the week of 419 when so many stocks broke hard. This one really did. It's come back,
It's
but
come back, but
it still
yeah.
looks like a pretty big eyesore on the chart there.
There is no doubt. I mean, some of that's because it's an IPO, and some of that, there's a lot of names out there that, yeah. So I can completely understand it. I decided to stand pat. I mean, I'm not too comfortable with the way the rally's narrowing. I have some SMH, so I'm just going to ride that for the chips. But yeah, I mean, that's an issue. Once you go beyond Nvidia, it's and maybe Dell, which is also super extended. A lot of these names have some flaws, and you have to say, well, why buy them? So I think that's a really good point.
Hmm. I guess the one counter to that, though, is that while the downside volume was higher, it wasn't quite above average for the week. Versus some of the up weeks. I'm just trying to find some sort of redeeming
Well, yeah,
uh,
that's the thing. It's like it
quality
is this
here.
wild. It's come back a little bit here. It's recaptured almost all of the losses from that
Yeah,
huge week.
so
So
that's good.
the people who held on, well, like there could be some weak holders. It wouldn't be surprise me if it pauses here and tries to form some kind of weird handle here, or it could do
Mm.
it a little higher. There's all sorts of things, but it is a question of like, because a lot of the names have some of these kind of wild, volatile action once you get outside of Nvidia.
All right. Well, we'll have to see what happens, but a very interesting company, no doubt, and compelling action today. Next on the list, also a compelling mover, is Wingstop, up 1.5% in some volume and arguably actionable today, Ed.
Yeah, there's a few reasons why. Yeah, it's breaking that trend line. It's bouncing off the 21-day line. Still pretty close to the 50-day line. And there's even a sort of there's a sort of a flat base. You could use 379 or 375. It's not going to show up in pattern rec because it got above the left-hand side, but because it didn't close above, that's still legitimate. So, it sort of formed a, little shelf above that, kind of thing. There's, even on a weekly chart, you can see there's a 3 weeks tight with the 400 level. I think this would probably be a good spot to be buying in a 3 or 4 weeks tight. So it's that would be a place where you could add on to, or if it you could easily base out and just form like a base on base type of situation, a flat base. So this one's just doing really well. There's a strong handful, not just a tiny handful, but a decent handful of restaurant stocks. Even though there's a lot of losers, this group is doing overall pretty well because of a few names like Wingstop that are just have had such a tremendous year plus.
Right. I know, kind of a dark horse almost. I mean, we focus so much on all the AI stuff that there's a couple, it's not, they're not all winners, but there are a couple of really interesting restaurants. I mean, this stock, if you go back to last November, was trading around what, 180, and now it's at 380 plus. I mean, that is a huge move here. So one that we want to be paying attention to, because there are stocks that can go on to double again after already doubling. So, not saying that's going to happen, but just worth paying attention to.
Absolutely.
Last but not least, but maybe least, our least favorite stock to talk about today, but we must, and that is Celsius. A really wild day and on the downside for this energy drink maker, down almost 13%. It did come off of its intraday lows a little bit to close right above the 50-day line, Ed. But some not so great news here hitting Celsius, which forced me to exit. But I know you have or had at least a much lower cost basis on your shares.
Yeah, I still held with this. I already whittled it down when it made that previous, like when it came the left-hand side of the cup, because I bought it pretty low. So I have a decent cost basis, yeah, in that area. So I have a sliver there. So other than that, like if you bought, on the prior base breakout, I was like, well, now at that point, you probably should have gotten out already. But I mean, when it came down, but if you bought it when it came back up through the 50-day line, or you were buying it when it sort of like snuck out past that little pause and we're trying to sneak in, you should be out. Definitely if you got bought near the top there. I mean, maybe this bounces back, maybe it doesn't, but it looks like it needs some repair work. As you say, there was some news there. There was some like sales weakened just a little bit on the week to week. And look, this is priced to perfection. I mean, this is not a low PE stock where it's like, that's okay. No, you want to see just blowout numbers all the time. So I think that's why it can be affected. On a weekly chart, it doesn't look as bad because this is what this stock does. But sometimes what this stock does is keep falling. It doesn't mean it falls one day. So it doesn't look as bad on a weekly, but again, I have a low cost base. I think other people who bought anywhere in the last few weeks should have gotten out just because either they quickly took a big loss or saw a sizable gain turn into nothing amid massive selling. And you just have to sometimes shoot first and ask questions later. And it was just not very good action here.
Exactly. Yeah. And in some respects, as you're kind of saying, Ed, not totally out of character for this stock. And I remember when I was getting into it, I said, this one very well could pull back and pull back a lot. And that's what it's doing. Whether it finds support here or continues to weaken is yet to be seen. But we'll be keeping tabs on it because the growth story here is quite interesting. But if there are signs of a slowdown, we'll have to see what the numbers are like next quarter when they report in another couple of months. So
I definitely want to watch. I'll be watching to see how it closes this week. It's a short week, but right now Friday seems a long way away.
Well, we'll have to see. All right. Well, thank you, Ed. And thanks everyone for tuning in. That is it from us for today. But coming up at 5 p.m. Eastern live on YouTube, we have our swing trader status update video. So if you want to get a sense of what the swing trader team is doing and how they're approaching the current market action, check that out live on our YouTube channel at 5 p.m. Eastern. And then we also will have it posted to investors.com/videos for the replay. So that's it for today. We will see you on IBD Live tomorrow morning.